Hello, it's the Smart Property Investment Show. Coming up in this episode, it's back to reality as one investor comes in and tells us about how a fishing trip changed their life. Hello and welcome to the Smart Property Investment Show, where we speculate, meditate and pontificate on all things property investment. My name is Andy Scott. I'm an investor and the publisher of Smart Property Investment. I'm joined as always by fellow investor and managing editor of the title, Mr. Philip Tarrant. Hello, Phil.
Hello, Andrew.
How are you this week?
I'm very well, thank you.
Good, pleased to hear it. Our special guest this week is Jim Hall. Jim is the publisher on a number of industry-leading titles in the mortgage broking and real estate space. Hello, Jim.
Hello, Andy.
Thanks for joining us today. How's your week been?
Very good, thanks. Good to be here. Big fan of the show so far, so very excited about taking the hot seat alongside yourself and Phil Tarrant today.
That is very, very good of you to say that. Now, you actually work with us here, don't you, Jim?
I do, indeed, yep.
Yeah, so look, I thought it may be, even though it may fill you with a bit of fear to consider, how long do you think you've known myself and Phil?
Probably for the best part of 15 years now, maybe just under.
Oh dear.
Stunned silence all around the room at that comment. No, Jim, look, we really appreciate you taking the time to have a chat with us today about your property journey. Look, I know, we knew each other before either of us had property. Both of us now, look, I would consider us very fortunate to both have, quite a significant amount of property between us. Look, I think, like all good stories, it's best to start at the beginning, but rather than sort of, I suppose, talk about your first property and where you bought it and all that stuff, I thought it'd be good to start if you just share, I guess, where you were in your life when you realised you sort of probably needed to do something with your wealth creation and how you ended up sort of choosing property.
Yeah, I guess it's probably a pretty familiar story for a lot of property investors. I reached an age, just turning about 30, just taken on a mortgage, just had my first child, who's now 9 years old almost. And I guess I sort of got to that point where I thought, better start thinking about the future a little bit more than I had done over the past 10, 12 years of my adult life. And so I had to think about, should I be doing something with my money? Should I be investing in property? Should I be investing in shares? So I went to see a financial advisor, funnily enough, first of all, from a big bank. I won't name the bank. And pretty much he just wanted to sell me up to sign up for insurance. And so I thought, well, that's probably a good idea now. I've got a child and sign up for insurance. And I never heard from him again. Then I spoke to another advisor shortly afterwards, one which wasn't affiliated with a big brand, and he recommended going into some managed funds, not something I particularly had a good understanding of, and so I sort of sat on that for a while, and then I remember quite clearly, actually, I was out with a good friend of mine on a fishing trip, and we got off the boat one morning, had quite a good haul, one of the better catches. And I remember saying, look, I'm not too sure what to do. He's got a bit of experience in investment and property. And he said, look, Jim, you've got to get into property. And I thought, you know what, I'm just going to do it. I'm just going to bite the bullet. And then from there, he introduced me to a mortgage broker who quickly introduced me to a property buyer. And what seemed like a very quick amount of time, I'd bought my first investment property, not really knowing what I was doing, but just knowing that I needed to do something. And I think, I've spoken to a lot of my friends over the last few years, now that I'm more experienced property investor, and I kind of sort of say the same thing, you've just got to do something. And, property for me, it's worked out very, very well over the last few years. It's something I understand, unlike shares. That's kind of how it came about, sort of the first investment.
Interesting you say, just about doing that. I mean, I'm sure, look, Phil's not the only one in the room to have noticed that, both you and I, weren't born and bred in this part of the country. We weren't even born in Australia. We're both people that come in. We're both citizens now of this great country. And, I think we've had that sort of, by the process of doing that, I think we've both got inside us of a bit of, you know what, I'm going to take a deep breath and take and plunge and go for it. Having the benefit now of looking back on sort of the 9 or so years that you've been investing, what would you say to people who are sat on the sidelines and because for a lot of people it's just there's that fear of it's a lot of money, it's a lot to do, and it can paralyse people. I mean, what, with the benefit of hindsight, what would you say now to yourself then?
Again, I think you can only look at my own situation and say, look, things have worked out quite well over the last few years for me. And I think one of the key things that I say to pretty much everyone I talk to about investing in property, friends, colleagues, whoever it might be, is, I'm not doing anything that hasn't been done by someone else beforehand. It's a pretty simple formula that I've decided to follow. I'm not trying to chase the latest fad or anything like that. I educated myself to a reasonable degree. I read a lot of books that were recommended to me, read some of the magazines that are out there. But yeah, sooner or later, I think you just got to make a decision.
You've got 9 years under your belt investing now.
That's not true, actually. I mean, I've actually only been I bought my first investment property. So we bought a house in 2007. And I think the first investment for it was, so it's only been about 4 years, probably 4 to 5 years.
Okay, that's good. So you're obviously a colleague of mine and Andy's here at work. We haven't really sort of explained what you do here, and you've pretty much got an advantage in terms of your day job, i.e. what you do here at Sterling Publishing. You head up our mortgages and real estate titles. So it means that you're pretty much connected with anyone in the mortgage and real estate space in Australia, which is a nice place to be. You've got a good relationship with those people, and, a lot of people who you can sort of have good conversations about property and where the directions of it is. But can you sort of explain how you might use some of the knowledge that you gather in your day-to-day job and apply that to how you go about investing in property today? Do you think that you get a lot more information than everyone else, or do you think that's information that's available to everyone?
I think being involved in mortgages in general, particularly in the mortgage and finance broking, I get a lot of time spent with primarily mortgage brokers and lenders to a similar degree, whose business is lending money for the purposes of buying property, i.e. for a home or for an investment property. A lot of the mortgage brokers that I have spoken to over the years, obviously assist their clients with investing in property, and a lot of them are avid property investors themselves. So I guess one of the key things that I was trying to sort of say earlier that I think is important is to surround yourself with, I guess, experts, people that have walked the walk, talked the talk. I think for me, yes, I'm very privileged, and I consider myself very fortunate to be in the position I am in my job, where I am surrounded with people that know what they're talking about when it comes to mortgages and investing in property. I've got a fantastic mortgage broker. I've got some great property buyers that find some fantastic properties for me over the years. I have access to people that Andy, through the investment property side of things. So, I've learnt to understand the good advice and some of the bad advice as well. So, I do consider myself lucky, and I do often look back to myself and think, what if I hadn't have taken the first step and got into investment property, I'd probably be kicking myself, and sort of how things have worked out for me, which have been reasonably good. I tell that same story to a lot of people, and I sort of pass on my own learnings over the last few years. As I say, I've got a lot of sort of friends that have also started up on the property investment road, and that's the advice I share them. Get yourself a good accountant, get yourself a good mortgage broker. You don't have to go around the route of using a property buyer. I do, simply because I'm very time poor. Got a young family at home. I don't have the time to really go into it as much as I can. Just get people you trust, and get people that have done it before you. Everyone I work with, mortgage broker, invest in property. The accountant I have probably has about 40 or 50 properties. Property buyers I have probably bought 3,000 odd properties over the last decade or so. So I've just surrounded myself with people that know more than I do about creating wealth through property investment. One of the books that I read, probably I pick it up every 18 months or so, is The Richest Man in Babylon. Centuries old book about investing in property for the future. It's pretty simple stuff, to be honest, But I think, you just have to take that leap of faith for that first property, I think, and it is a leap of faith. And again, so the more you talk to people, and it's one of the things you hear and watch the TV shows and listen to people all the time, procrastinate, and it's easy to do, it's the easiest thing to do. And I've done it myself, probably 3 or 4 years earlier I should have started investing in property. But, and as I said, when I went in about that first property, still didn't really understand it a great deal, but all of a sudden it comes together. And again, surrounding yourself with the right people, it all makes sense. It becomes quite clear, and been good.
I think you make a good point there, Jim, about, I guess all of us in this room have been quite fortunate in, I suppose, the access that we have. But, as a point that, Phil, you've made a number of times, and it's something we both agree, there's nothing rocket science about the knowledge that we have. I think the environment that we've had has just helped us, I suppose, clarify and see these are the people to have around us. These are the way that we should go about it. And again, we hear the same thing again and again from other guests as well, be they professionals or other investors about what to do that thing, or rather how to surround yourself with the right people to encourage you to take action and stop that procrastination. I think, you mentioned an interesting point, I think, about doing your first property and then the next ones. Now, you've obviously done that since then. And look, it's a stat I roll out on more than one occasion. According to the ATO, only 85% of people who would consider themselves property investors have any more than one investment property. They've got one, and that's the lot. Even though you had a plan by the sounds of things to get more than just one, how long between you getting the first did you sit there and go, you know what? This is working. It's tracking how I expected to do. It's time to jump in. Did you sit and wait for ages, or were you just, reckless Jim? Bang, we're off. Let's give it a go. Who cares what happens to the kids' futures? I'm gambling it all on black.
Well, it's quite funny you say that, actually, Andy, because no, I actually did not have a goal or a big plan. My plan was just that I knew that I had to do something, and as I saw, sort of things steamrolled quite quickly. And it wasn't until I'd actually got that first property investment, and I sat down with my accountant. He said, "Okay, Jim, so what are your goals? What do you want?" And I said, "Oh, well, I don't actually have any goals." So he sat down with him, and he said, "Well, look, okay, let's work some goals out. What do you want to do?" I said, "Well, I don't want to work forever. I like working, but I don't want to work until I'm 65, 70." He said, "Okay, well, look, let's look at a plan in terms of, looking to replace your income through property investment." And so we sort of sat down and said, based on a property portfolio worth X amount, returning around about 5%, this is what you need to look to build, over the years, blah, blah, blah. Once you get some equity out, pull it out. And then so once that, it all became a bit clear, I sat down there on a piece of paper, which I actually still carry around in my wallet, and it's got my goals written down to create a property portfolio worth X amount, will return X amount in this year's. And look, things change over the last few years. We actually moved our principal place of residence, did a slightly bigger house as the kids were sort of growing up. That put things on hold, so your goals will adjust. But it was a bit of an accident. And then once I got that first property, I set the goals out, and that just gives you something to aim for and a bit of clarity. And and then they came quite quickly, to be honest, after that. Yeah.
The message with this is that it's all about education. It's all about understanding what you want to achieve. It's about working out what information you need in order to be able to set goals. And we were chatting before about the fact that you've got great access to people in the property game. So does Andy, so do myself. But anyone can have that same level of access. There are some great communities out there. The beauty about property investment, which I really enjoy, is that it's quite collegiate. Property investors like talking about property investment to other property investors. There's so many people out there who are willing to share their experience. It's not like some secret hidden game where only a couple of people have got the keys to the secret. Most property investors are really happy to chat about property investment, and most property professionals really enjoy chatting with property investors, whether they're starting out or doing what they're doing. But it's interesting the cycle that you've gone through, Jim, where you've started off with, I'm going to invest in property because it sounds like the right thing to do, to sort of that next stage when you've gone, okay, why am I doing this, and how has it sort of influenced the way in which I'm going to create wealth, to where you are today when you're a lot more sophisticated investor and you've got bigger picture plans and you've got actually a process in place to be able to realise that. Are you've got a busy job, you travel a lot with work, it's quite a high stressful, high energy type of job. How do you find the time to continue to be a property investor while still managing the 50, 60, 70 hours, 80 hours a week that you work?
Look, a lot of people, a lot of people I hear say, if you're going to be a property investor, you've got to treat it like a business. Yes, you do. I haven't seen a number of the properties that I own. I base my decisions purely on maths, purely on research of the area. For me, look, I've got a young family. Cash flow is quite important. I'm not one for negative gearing to a particular amount. I want to live a nice sort of comfortable lifestyle and not sort of scratch around because I've spent too much of my investment properties. So for me, it comes down to properties I look on they've got to do the sums basically. It's that simple. So I keep account on a regular basis, probably once a month. I'll sit down, I'll probably spend an evening going through sort of all my figures, going through the incomings and the outgoings of each property. I use a property manager for all of my properties, so each month they send me a nice statement saying this is how much rent's received, this is how much you need to pay, or we've had to pay in strata, for example. So again, I get most people to do things for me, knowing where my limitations are, me personally, and then I just keep account of all the records. As I say, probably once a month I make sure that everything's updated. I've got a number of spreadsheets that I use to do that.
Do you lie there in bed at night and worry about your property portfolio and making sure you can pay your mortgage?
No, I don't. I don't, because again, the strategy that I've gone down. I'm not a big gambler, so I got a couple of kids at home. Like I keep stressing, and I don't like risk basically. So my strategy was to go down in what I see slightly safer route of having slightly lower priced properties. For example, someone that's got a rent of, my rents probably go anywhere from the lowest from $250 to probably $500 a week in rent. The issue with that being, or the good issue with that rather, is if I have a problem with one property and tenants aren't paying, whatever reason happens, look, obviously it's a bit of a bummer having to fork out $300-400 a rent, but you know what, I could have one property where the rent's $1,000 a week, and that's probably going to hurt me quite a lot, to be honest, if that goes untenanted for a month. So I've gone pretty low strategy, pretty low risk, spread my portfolio. There's nothing in my portfolio that's really out of the normal. Pretty standard stuff. I've been lucky with tenants again, because I've gone for areas where I know that there's high demand for rent. And capital growth has been good as well. A few properties in Sydney over the last few years, which of course have been very good. A few in Brisbane as well, which are picking up nicely as well. But they're all pretty safe, and they're all reasonably sort of cash neutral at the end of the day by the time the tax comes through. So I don't have to owe too much at the moment.
Obviously, you've got a lot of colleagues at work here who invest in property that understand it. What sort of outside of work, and sort of more social friends or peers that you have, are they sort of aware of the size of your portfolio and how you're investing, and what's their perception towards it? Do they think, oh, Jim, you're investing in these areas which, it's low market, and, are people going to pay your rent, or don't they smash your house up or anything like that? What's sort of the perception of those friends that you have outside?
Yeah, it's funny you say that. I get that sometimes, but not that often. I think most people, you don't realise, because I'm just connected and I talk about property every single day at work, and I love property first and foremost as well. But most people just aren't aware of what you can actually do. A lot of people I know, mid to late 30s, 40s, in that age bracket. Most of them have got a mortgage, and they're just not aware that they can actually use the equity in their house to fund an investment property. I have conversations with people, and I don't like to advise people, and I say, I can only tell my own experiences, and this is how I've gone about investing and why I've gone about it.
You're not qualified to give advice either.
I'm not qualified to give advice, nor do I give advice, Andy, but so I just tell my story, and as I say, a lot of my friends have since invested in property. They've gone and done a bit of research at the back of conversations I've had, and they're just simply not aware, Phil, I think.
But I don't understand that, because obviously they're not reading smartpropertyinvestment.com.au to actually understand how they go about doing it. But you flick on the TV, there's a property show on. All there is on TV
only if you're on
is property
Foxtel.
shows. It's true. But you've got the block, you've got this, that, and the other, and And no one actually talks about, it's always about how pretty it looks or what colour tiles you put on the wall or what sort of fixtures or fittings you stuck in your kitchen. You know, when you say that, people don't understand that they've got equity in a property that they can leverage to invest in property, that they're not aware of it. It's just the mind boggles that that's the case.
Well, I think part of it is that we come from a generation where, our parents would have been, the idea of risk was something that wasn't done. You got a mortgage to pay it down. That's all that you did in that regard. So I think there's a mindset shift in that regard of what things have done as well.
I think, Andy, a lot of people just aren't comfortable taking on debt. I've got a reasonable sized portfolio, but I do owe the banks an awful lot of money. But then I've also got assets worth quite a lot of money, and I think that's probably a lot of, you buy your home. Most people go down the scenario of you buy your first home, you saved up for a deposit, you're fortunate enough to get a deposit from your parents, which is great. All of a sudden you've got a huge mortgage. Your house, let's just take Sydney as we're in Sydney. Let's say your house is worth, $1 million. You might have a mortgage of, let's say, $700,000. You've got $300,000, but a lot of people think, oh my God, I've got a $700,000 mortgage. I don't want any more debt.
To be honest, I think you're right. It's funny that I have conversations with people about who the idea of investing in property to them is not something that they think about doing, and it's not something I would do, but they want to live in a nice house. And so the idea of taking on a mortgage to them is not an issue because they want to buy a nice house. But when they talk about investment, you talk about doing investment property, and the question I get asked a lot is, well, what happens if something goes wrong? And I'm always like, well, what happens if something goes wrong with your mortgage anyway? With any sort of debt that you take on, there's always an element of risk. There's always potential problems that come up down the track. But one thing that I've certainly come to realise with investing in property, I think, and you'll probably agree with this, Jim, and you, Phil, is that if I've only got a mortgage on one place and I've got a problem with repayments, I've got a real problem. I've got, Jim, yourself, you've got 2 young kids. All of a sudden, you might have to move them out of there. They might have to change schools. Who knows what sort of problems come on your desk. If I've got 4 or 5 properties and one of them doesn't start paying the rent on it, it's still a problem. I'm not going to tell you that. But you know what? It's a smaller problem because it's only a fifth of what I owe that I've got the problem from rather than all of what I owe and stuff like that. So I think you've hit the nail on the head, Jim, about people being scared of taking on risks.
Yeah, look, I think everyone's got their own risk profile, and some people are more risk adverse than others. Me personally, I don't have a particularly risky outlook on things. I like to be pretty safe, pretty steady with things. But some people have made a lot of money with some slightly riskier purchases of property. Again, the reason I went into property is I understand property, bricks and mortar, and I just don't really understand the share market. I speak to a lot of people who have made a lot of money in shares, and I wouldn't advise anyone against that. Again, I'd just say do your research. If you're going to go into shares and stocks and shares, and get someone that knows what they're doing.
It's fundamental, I think people should only invest in stuff that they understand, and there's a lot of things about the share market or alternative investments or some of the more complicated investment products in the marketplace that have a buzz about them and people get really involved in them. But most people don't actually get what they're getting by investing in that, or they're doing it for a reason of a tax minimisation and strategy. You shouldn't be investing in property for tax reasons. You should be investing in property because you want the thing to go up in value and you want the thing to hopefully pay for itself. And that's the ethos of how we choose to invest, and it's very much your plan as well. You try and identify under market value properties, which you do so by using a very talented buyer's agent. But you pick these properties up and hopefully below market value in areas which you hope are going to grow quickly over time. That's going to help you cover the mortgage on the way through. What we like to do, Jim, when we get guys onto the podcast is to just go through a couple of quick things, just get a bit of insight into some of their trials and tribulations of property investment. You've covered some of those off already, but I just want to bang through a couple of things really quickly here. On the whole sort of concept of buying these under market value properties, which is your strategy, and look for that realising growth. So outside of your family home, which you first bought, what was your first investment property? Where was it? What was it? How much you pay for it? And what's it doing right now?
The first property I bought was a 3-bedroom duplex in Eagle Vale, which is sort of Campbelltown area of Sydney. I purchased that, I think it was about $249,000. This was back in 2010, I believe, July 2010, and that is currently worth. I did actually have a look the other day actually on real estate, just as some comparables. It's upwards of plus over the $400,000. I think $430,000 it's worth now, something like that. So it's been pretty good, but that's probably been one of my worst performing properties. In all honesty, did have quite a bit of problems with that actually. Early doors, the retaining wall that cost me a reasonable amount of money. I had to chuck in with a fence. I had to put in a whole new retaining wall, which cost me sort of $7,000-8,000. Which wasn't ideal.
The rent's been good though. It's been reasonably initial.
I've still got the same tenants in there as I first started actually.
Good.
Yeah. So I've been quite lucky tenants. Touch wood.
So outside of that, would you say has been one of your best performing properties? What's your absolute lemon? What's the worst property you've got and why?
My absolute lemon.
I'm sure you haven't got any, but
I actually don't. I actually don't have any lemons. In all honesty, I really don't. I have been quite fortunate to date with the properties. The ones I've bought more recently, it's hard to tell. I've bought a couple in the last year up in Brisbane, which they've done okay, but I'm in it for the long term. I'm not expecting. I mean, I've been quite fortunate with property in Sydney, like everyone has.
What about ones possibly, Jim, that have given you a headache, even though they may not necessarily? I mean, look, we were speaking with someone the other day who was telling us about a property they bought that's gone down significantly in value. They can't get a rent on it, they cannot sell it, they are stuck with it. It's probably worth 6 figures less than what they paid for it. In terms of, I mean, you haven't got anything like that in your portfolio, but surely you've got one that's just like a headache. There's been too many letters from the real estate agent, or too many letters from the property manager, or too many letters from council that are just like, if I had my way again, I wish I hadn't bloody picked this one up.
That's one of the issues with buying slightly older properties, is you can have a tendency for things to go a little bit wrong. So no real lemons. There's a property I do have in Queensland that it's had a few, just sort of, it seems like a sort of a constant influx of tenant requests for. I've just had one this week actually asking for some new carpets, and they look fine to me, to be honest. But the same tenants whose friends drove their car into the garage.
That's where a car lives, Jim.
And yes, they forgot to open the door though, Andy, unfortunately. So that needed replacing. A few little bits like that. But yeah, really, honestly, I'd love to give you some real juicy ones. But
I remember you chatting to me. There's two things I know about your property portfolio, and I don't know the ins and outs of it, but a couple of things that we've spoken to over the years. One is that you had something to do with a swimming pool once.
That's exactly the one I was.
Funny enough, that's actually been my best performing property.
Oh, is it?
Yeah, funnily enough. So we did buy, and this was probably the one property that we've done. I've done two properties. I've done some reasonably sized renovations on. This was the biggest. This was actually a termite infested house, which we picked up for about $240,000. We spent about $60,000 on a renovation, from memory, maybe a little bit more than that. It was cosmetic damage. So termites were fixed quite easy. Wasn't a major problem. Unfortunately, we had a situation. Had a swimming pool at the back, and we decided that we were going to fill in the swimming pool. And then council came around and said, you can't actually do that. You've got to get it properly removed. So that was an extra cost. So I ended up spending, at the time, it was a lot of money. It was about $25,000 more than I'd budgeted. But as I say, that property's actually been phenomenal. And
what's it valued at now?
It's now worth upwards of $600,000.
Right, rent's pretty good.
Rent's paying $475. So purchased for just under $250. All up, I think I spent about $110 on it. So it's been pretty good.
So I remember also it was an issue that you had. You put an offer and got accepted on a property. Had some power lines out the front. Was that you?
Yeah, that's
some sort of financing issues.
But again, that's worked out quite well for me. So we put in an offer. This is up in Queensland. The house was actually going to go to auction, and we put in an offer before auction of $275,000. I think it was a 3 or 4 bedroom house. But prior to the auction, we got the valuation done at sort of 275. But yeah, there was some major power lines reasonably close by, so it turned out that it was fine, but I needed to put in a 20% deposit when I'd originally planned on putting in, I think it was either 15 or 10% deposits. So that just sort of changed my strategy and my funding on that property a bit. But as luck would have it, they didn't accept our offer pre-auction of $275,000. No one actually bid at the auction, and we ended up picking up the property for $245,000. So we made $30,000 instantly.
Days.
So again, worked out quite well for me. Maybe I'm a bit of a lucky guy.
Don't get carried away, mate. So speaking of luck, your next property, what's it going to be? Where's it going to be? How's it going to be?
I'm actually probably tomorrow. I'm expecting just getting a valuation done on a property, looking to move to unconditional. It's property in Victoria, so it'll be my first property in Victoria, just looking to diversify my portfolio outside of New South Wales and Queensland. It's just outside Geelong. It's 3 bedroom, standing on about 900 square metres with space to do a bit of rezoning and a bit of development there, looking at putting a townhouse or 2 on the back of it. So properties I'm looking at now are, looking at properties that I can do something with in the mid-term.
That's good. So I guess that comes with, you're talking about before, your willingness to do more and more in your property portfolio. Experience, I guess, gives you confidence, and as you get more confidence, you're going to start getting a little bit more adventurous, I guess, in the way you're going to invest. So I'm sure Andy wants to wrap up pretty soon. So what I'm keen to do is just get 3 tips from you. So that Jim Hall's 3 tips for property investment success. What are they for you?
3 tips. So I think the most important is surround yourself with people that have done it. That are successful in property. Whether that's in the short term, the medium term, or the long term. Get yourself a good accountant. Get yourself a good mortgage broker. Try and talk to investors. There's some good TV programs on. There's some great expos that you can go to across the country. Get onto smart property investment. There's plenty of people in there that love talking about property, sharing all of their tips, their success stories, and all the problems that they've had as well. I think I've been fortunate enough that other people have made a lot of mistakes, and they've pass those mistakes on to me, so I don't have to do it. So number 1, surround yourself with people that know what they're doing, that have walked the walk, talk the talk. Number 2, I'd say just take a deep breath and go for it. If it's something that you've thought about, if you're in that time of your life, like me, you're thinking, or we're thinking, I need to do something, I've got to invest in the future, I'm not sure what, but I think properties are, but is it the best property? Look, I don't think you're ever going to find the best property. There's always a better investment property out there. You know what? Just go for it. And again, that just comes down to good advice, good people. Do your research, essentially. Number 3, don't invest. No, I wouldn't say don't invest in anywhere risky. I would say. Invest in what you're comfortable with. If you're not comfortable taking on massive debt, don't buy a property where it means you've got massive debt. Buy something you're comfortable. At the end of the day, you've got to sleep at night. You don't want to be up every night worrying about the debt that you're in, whether the rent's covering the mortgage, whether people are going to be damaging the, whatever it might be, whatever your worries are. You just don't need that, and so that would be my 3 points.
That's great stuff, Jim. Look, really appreciate you coming in today, mate, and opening up and sharing some stories and insights about, I suppose, your journey as an investor and what's going on in your portfolio and stuff like that as well. Look, obviously, you made sure to tell people to go to all the w's.smartpropertyinvestment.com.au. I cannot overemphasise the importance of doing that either.
You'd be a fool not to.
You would be a fool not to, Jim. So, but mate, really do appreciate you coming in. Look, it's about that time we need to to wrap things up. So look, as always, guys, thanks for listening. If there's anything that you want to contact me about, please email me on publisher@smartpropertyinvestment.com.au. Just reminds for me to say thank you, Jim. Appreciate your time coming in, mate.
No problem.
Phil, hello and goodbye. Say
Pleasure.
goodbye.
See you later.
And this is me saying goodbye. Thanks for your time, guys. Speak to you next week.